This is Liberty Law Talk, part of Liberty Fund's online library of law and liberty. Your host is Liberty Fund fellow Richard Reinsch. Our web address is libertylawsite.org, where you can subscribe, comment, find other episodes and links related to today's conversation. Our email address is lal@libertyfund.org. Today we are discussing with Peter Schuck his latest book, Why Government Fails So Often. Peter Schuck is the Simeon E. Baldwin Professor of Law Emeritus at Yale. He is the author and editor of many books, including Agent Orange on Trial, Diversity in America, and Understanding America. He also knows whereof he speaks. Before joining Yale, he was an official in the U.S. Department of Health, Education, and Welfare. Peter, welcome to the program.
Well, thank you very much, Richard.
So I guess former federal bureaucrats are becoming something of a thing on this program. I recently had John DiIulio, first director of the Office of Faith-Based Initiatives. So it's good to learn from you, gentlemen. Although this being a podcast where people, try and help people understand issues and questions related to limited and small government. Perhaps it's good that we talk to people who have worked inside the federal government. The book is entitled "Why Government Fails So Often," and maybe this answers a few of my questions. Why did you write "Why Government Fails So Often"?
Because I perceived immense failure, and I assumed, but I needed to determine whether it was true, that a lot of the distrust in government and the disappointment and in really increasing hostility toward government was due not so much to political gridlock, but rather to government's poor performance. And I don't think that's fully appreciated. So I thought people on the left and people on the right and people in the center could benefit from this, because people on the right tend to blame it all on nasty markets, and people on the right tend to blame it on runaway bureaucracies, and I think the causes are much deeper than that, much more structural, and that these causes afflict Democratic and Republican administrations.
Now, your book, it's not uniformly a refutation of federal policymaking, and federal policymaking in particular since the New Deal, or what we can call the new system. I think you use that term in your book.
Yes, I do.
But your book is quite thorough in refuting a lot of federal policymaking and a lot of big policies that have happened in recent decades, including things like Sarbanes Oxley, Dodd Frank, the Stimulus Act, Obamacare, things like that. Are you trying to provide the resources that we could actually get these policies right, or are they somehow implicated in the structural critical analysis you provide? I mean, could Obamacare or Dodd Frank, could these policies be correctly implemented and executed if they were to follow the learning you provide in the book, or is something altogether wrong with those policies?
Well, I think they would certainly be improved. One of the great problems in the design of many federal policies is moral hazard, which is the design of a policy in which it actually encourages people to take greater risk than they are willing to pay for, and therefore they kind of free ride on the program. And that's so pervasive. It's true in Obamacare. It's particularly true in the housing area, which brought about the downfall of Fannie Mae and Freddie Mac, and it's true in almost all of the insurance programs, except maybe for Social Security, because people are not expected to work at that age. Although even there, some economists argue that people, because of Social Security, people don't save enough during their working lives, and therefore they put themselves at greater risk, knowing that they will be bailed out by Social Security. That's a more controversial position, but the important point is that almost every federal program that attempts to reduce risk ends up increasing some other risks at the cost of taxpayers. So, unless the program is designed to reduce moral hazard, which it usually can be done. So, my advice in designing these programs and redesigning Obamacare and others would be to do that. And you do that. There are several ways in which you can do that. One is to make sure that the people who are taking the risks are people who bear the costs, or most of the costs, for creating those risks.
So in the case of Obamacare, and the moral hazard, and also you write about a crowding out effect as well. And we've seen maybe the first crisis of Obamacare, maybe it was the second crisis of Obamacare, was people who had individual healthcare policies they really liked, having those yanked from them under coverage criteria and being put within the Obamacare pool. Is that kind of what you're getting at? That you want to stop that process?
That is one example, and it also has certain protections against of health insurers in order to try to persuade them to participate, and those also involve a moral hazard. And I think the designers of the program understood that in order to induce private insurers to participate in the program and bear the burdens that were imposed on them through taxes and through mandates, that they would have to, that the government would have to provide some subsidies to the insurers, not just the people who are signing up. So it's really built into the system.
So, just thinking about another large piece of legislation, the Dodd Frank Act. You have some discussion of this in your book. You note what David Skeel and some others have picked up on, which is perhaps it's codifying a bailout process. And so, is Dodd Frank, and if we think about this kind of systemic analysis in your book about collective irrationality, effects of rigidity within the bureaucracy, of the crowding out effect, the inability to appreciate markets, is Dodd Frank, is its problem that it attacked a wrong problem? Maybe it should have done something else, like break up the large banks. Would that be a policy goal more feasible to worry about a bailout or a systemic financial crisis issue?
That's a little above my pay grade. I think breaking up the big banks is certainly a plausible policy option, but I have not studied that particular approach well enough to know whether that would have, on balance, been a better thing to have done. But it's certainly true that Dodd-Frank has reinforced some of the too big to fail incentives in the system. And now it may even extend this to the so-called shadow banks by designating them in the same fashion, and there's an implicit, if not explicit, bailout future for those companies if they should fail.
When you say shadow banks, you're talking about companies, not primarily banking concerns, but insurance companies, say, who are labeled as, under this criteria of Dodd-Frank, as posing a systemic financial threat. They come under that. AIG, they come under that rubric.
Would be an example, yeah.
And as many people acknowledge, the market kind of knows they can't be allowed to fail, and so they get cheaper access to credit. I've read things like that, giving them advantage over their competitors.
Yeah, I'm just reading a book now about the GSEs, the Fannie Mae and Freddie Mac, a very good book by Peter Wallison, in which he sort of details he explains in great detail how it is that the GSEs came to have the implicit and essentially explicit guarantee that the government would subsidize any losses that they would incur in their securitization and then purchasing of mortgage, the creation of a secondary market for mortgages, and this allowed the GSEs to borrow at very, very low rates, almost Treasury bill rates, and gave them all sorts of political and other advantages, which encouraged them to overextend themselves and dip deeper and deeper into the subprime market.
No, and I'm glad you bring up the GSEs, because there's been a lot of articles recently, and I think this goes to something in your book on incentives and rigidity within federal policymaking, because what I'm reading is this process, maybe not to the same degree of scope, but it's picking back up again in the sense of rules on mortgages are being relaxed, the 20% rule is being waived, and federal GSEs are actually getting back into this process of of loans beyond conventional criteria. And so it's like, what have we learned? Or what do we refuse to learn because of ideological goals or beliefs in Americans should own homes, we want to increase home ownership rates, et cetera. And it's almost stunning to think about.
It is. It is remarkable that so few years after the crisis, we're back at it again. You can see, as you were saying, you can see the glimmers of what's likely to happen unless Congress turns around. The underwriting standards are being forced down. The new head of Mel Watt, the new head of
Mel Watt,
of the GSE group is already trying to push those standards down to make more people eligible for that. And as Wallison points out, in any democratic society, you're going to that the government gets deeply involved in, you're going to have enormous pressures to make benefits available to more and more people. And that sounds good on its face, and in some cases is good, but when the decisions that produces are very bad decisions, then they're going to be made worse off. And so many people were made worse off in the low-income population.
Yeah, not to mention neighborhoods being falling into almost a discarded state because it was cheaper for people to walk away than actually try and make good on their mortgages.
And now with the GSEs, they become so profitable because of the low interest rate environment and the expansion of the economy that they're now providing billions of dollars of revenues to the Treasury, and so there's a feeling. Well, let's continue this merry-go-round. Why get off now? But we know from history that housing booms and bubbles almost invariably end badly. And when the government is deeply involved in the creation of the bubble and doesn't want to be blamed for the bursting of the bubble, you're going to have some very bad decisions made.
Yeah, run government like a business is what I was thinking when I heard the idea that.
I don't know about that.
I was just kidding. I'm just kidding.
Yeah. Okay.
So something you discuss earlier in the book, very early in the book, is that the bar to federal government intervention is very low now. So we have a major event, we have a crisis, we get a flurry of legislation, and some of that we've been discussing, and then from that legislation comes something, a flurry also of regulations, much more impactful maybe even than the statute. But then when we talk about the pessimism of Americans, and you walk through how pessimistic Americans are about their federal government, and I guess one question that comes to mind is, why does this process continue? It's almost as if there is a failure to learn about centralization in general, which is as I walk through it, particularly part 2 of your book, I just kept thinking about Friedrich Hayek and his famous article in 1948, The Problem of Knowledge in Society. Each person can only bring a small unit of information to bear, and somehow in a market it all clears because of prices. And just thinking about Walmart. My family, we go to Walmart fairly frequently. Hundreds of thousands of goods in that store, and they all seem to be set at a very competitive price. And they're all, this is all being organized by this company in a very efficient way. And yet this eludes federal bureaucracy, but we still go around and round here in this process.
Well, you're absolutely right. And as a matter of fact, I just assigned the Hayek article to my public policy students, and they didn't know it. They hadn't read Hayek. They had never heard of him. These are undergraduates at Berkeley. Are very, very talented students, and it was sort of shocking to me that they hadn't. So I told them to go and read it a second time, because the message is so powerful and it's so clearly true. That the problem that the government has in amassing the kind of information and analyzing the kind of information that's necessary to try to reshape social activities from the top is simply not possible. And when you compare that, as Hayek does, with the amount of information an individual needs to know in order to make an optimizing decision for the individual, which is all he or she really needs to do is to look at the price of the input that he or she is using, that difference is stunning, really stunning, and it accounts for a lot of the problems that I discuss in my book.
So, and thinking about the analysis you put forward, how do you fall out or differ or agree? I mean, I'm curious in thinking about public choice scholarship on government and bureaucracy, which is, I would say, much more scathing. I think. I mean, their position would be almost from the outset it's doomed to failure, because of basically government actors are really just they're people, but they come with self-interest and they come with all of the things that we all enter into in any transaction, and they're not absolved from that just because they're in the government. And they seek to aggrandize their own personal self-interest, however that may be, and look into government. So, in your analysis, though, there are all sorts of structural problems. But how does that differ with that field of scholarship?
Yeah, but that's a fair question. I discuss public choice theory quite explicitly. I argue that there are, very generally speaking, two theories that seek to explain what government does and why it does it. And that's public interest theory, the idea that officials are seeking to advance some larger social goal that has been specified for them by Congress, and then public choice theory, which you've just described. And I think the public interest theory is of the two is far weaker. And if you judge a theory by the extent to which it can predict actual outcomes, public choice theory has a great deal to recommend it. It's on target so often in predicting what's likely to happen. However, public choice theory has some limitations, and the theory is in some ways too general because it speaks of maximizing self-interest on the part of officials. Well, self-interest can include a lot of different things. It's not simply a matter of aggrandizing power or budget. It includes many other things, including some idealistic or what might loosely be called public interest goals. And the problem is, again, that the public choice theory is very difficult to test because it defines self-interest in a way that it covers almost any ambition. I criticize it to that extent, but I also say that of the two, there's no question that public choice theory gives you much better predictions than public interest theory does. And I then go on to explain some of the implications that we do observe that really powerfully explain the pathologies that I've documented, the poor performance that I've analyzed.
I think of the federal policymaking role. I've done a lot of interviews. I just interviewed Philip Hamburger in his book on the administrative state, which he argues is fundamentally unconstitutional and deeply at odds with the Anglo-American.
I disagree with that.
I'm sure you do. But we're thinking a lot about the administrative state. What role does that play here in your analysis? Is this a set of bureaucrats that is, they're incredibly powerful? Congress wants to control them. That's now how Congress understands itself as a manager of the administrative state. The executive wants to control them. We famously, conservatives during the period when they thought they would have a lock on the presidency had this sort of idea that the president should control the administrative state. Then we also have the judges intervening. It seems to me there's all sorts of conflicting authorities there, and we really don't know, and particularly actors who are being regulated really don't look upon the government as some sort of neutral, welfare maximizing entity. It's regulating for its own self-interest and for a lot of incentives within that bureaucracy.
Well, again, I don't think that's I think that's overstating the motivations of officials, and I think a lot of them are trying to to enforce the laws and execute the laws that Congress passed. I think Congress is the real culprit here, much more so than the bureaucracy. And I think virtually all the pathologies that I describe and the consequences of those pathologies can be laid at the door of Congress. Most bureaucrats are trying to enforce what Congress had them do, and Congress doesn't write statutes in ways that that will prevent them from exercising their discretion in ways that are dysfunctional. That's partly the problem of the way Congress writes statutes, and it also affects. It's also very much shaped by interest groups of all kinds, not just business interest groups, but interest groups that represent broader social interests or purport to, and they exercise enormous power over the Congress and over the administrative agencies. But what I want to emphasize are, as I say, these underlying structural features that I spend time analyzing. So incentives, which we've just been talking about, the incentives analysis of public choice theory certainly has a lot to recommend it, and so we've already talked about that. But and another one you and I have just touched on is information, how poor the government's decision-making information is, especially compared to market actors. Now, the government, of course, is trying to do things that market actors can't do, and one of the reasons why we authorize government to do these things is because we think there are market imperfections that can best be met by government control, for example, of externalities, as in the environmental area. But the mere fact that there's a theoretical reason for government to regulate markets doesn't mean that it's going to be free of the kinds of deformities that I've just described. So information is very poor. It's slow. It's distorted. It's biased, and it's very slow to correct itself. Again, comparing it to the market-generated information, which is extraordinarily valuable to market actors and is therefore driven to be correct, quick, adaptable to new circumstances, and there's a penalty for getting it wrong. So information is very important. I also talk about flexibility. Again, market is extraordinarily flexible, whereas government is extremely inflexible because the status quo is the major driver of government policy, and it's very difficult to move off the status quo for reasons that I discuss. And then there's another problem, which is just the opposite of inflexibility, which is the propensity of governments to change their direction, which they should do if the democratic elections tell them that the present direction is wrong. They've got to change, and when they do change, they undermine their ability to secure cooperation from other actors, either state and local government actors or actors in the market, whose cooperation and investment they need to make their policy successful. In the market, you can price uncertainty, and you can bond yourself to assure that you're going to continue in a certain direction or pay a big price for it. But it's very hard for government to do that if it's going to be democratically accountable. It can't regulate the uncertainty that it's creating at the same time. So that's a special kind of problem that I think people don't think about. Another is what I call the limits of law, which is the basic idea that anytime you're going to use law to make public policy, and of course that's virtually all the time that we're engaged in public policy making, because law is the grammar of policy, you're buying into a set of inherent limitations of law. It's oversimplification of the world that it's addressed to. It uses very few categories because it has to keep things simple, and so it's invariably oversimplifying and overgeneralizing what are really discrete and diverse areas of social activity. Also, you're buying into a legal process that is very costly, very slow, and generally favors those who have access to lawyers and have the time to invest in additional legal process. So again, we all believe in the rule of law. My point is that the rule of law comes with a series of characteristics that are simply unavoidable if the rule of law is going to be upheld, and so that makes government policy making that much more problematic. And then I have a chapter on the bureaucracy, which is in a pretty dire state today, much worse than it's been in the past, I think. And this might be something that libertarians applaud because they want to show that the government failure is inevitable and get rid of the federal bureaucracy. And I think that's a great mistake because the federal bureaucracy is here to stay, and we have entrusted very many important functions to them. And we could certainly change those functions, but as long as they're out there doing things, then they ought to do them well. And they're increasingly demoralized and subject to very poor incentives.
On this point, I mean, I want to back up, and I just want to ask you, although I know this isn't the focus of your book, I know the focus of your book is on policy making, bad policy making, but you mentioned Congress, and I just want to ask you, so my view is Congress has, for some time now, fundamentally punted on its constitutional duties to be a public body of self-government, and it now sees itself as a managerial body, managing the administrative state. And this is for a lot of reasons. The incentives are actually better for members. They can punt on authority, they can punt on responsibility, keep authority, and it also allows them to trumpet things that they've done to various constituent groups. And then if something goes wrong, they can bring in federal bureaucrats and humiliate them in hearings and things like that,
exactly.
Investigations. So I guess that's one problem, but I see that related to the large administrative state that Congress has been complicit in creating, and also, as you mentioned, I think, drafting these statutes that are broad, open-ended, and really are to be implemented through regulation, not through the laws they've drafted and debated and come to some sort of an agreement on, which seems to me that's just a fundamental crisis of constitutional government.
Well, I think I agree with your factual observations, but I don't agree that the delegations that are being made by Congress are, on the whole, unconstitutional. I think, in fact, that it's inevitable that when Congress takes on very complex problems, it's going to have to delegate authority to bureaucrats in order to figure out how to apply those more general rules to very specific situations. I think that's simply inevitable, I think actually there's a lot to be said for the public input on policy making to occur not only at the congressional level but at the administrative level, where the agency has actually broken the issue down into more specific elements that the public can understand and the public can then react to in determining whether particular regulatory proposals are good or bad, and how they need to be changed. That's a lot harder to do at the congressional level when you don't really know exactly how a particular policy is going to affect you in many cases. So there is this there is this dilemma. I wouldn't call it, I don't know if it's a crisis, but it's a dilemma, and it's pretty inherent in any government that takes on complex problems. And it would be true even if our government were a lot smaller than it is today. So it's really important to have a regulatory process that is transparent and that invites broad participation. Again, at the point where broad policies are being broken down into more specific pieces, so people can predict how they will affect them, and then criticize them or support them accordingly. As far as the courts are concerned, they reflect in part a deep suspicion of government in our history that continues, a suspicion that I think on the whole has served us well, precisely for the reasons that I explain in delineating the pathologies of government. But I don't think the courts are very good at doing the job that this requires, because again, the experts in the bureaucracy and in Congress have far more ability to parse all these problems than the courts can. And basically, all the courts can do is enforce a bunch of procedures and procedural restrictions on the bureaucracy, which hopefully will produce better policy making. And if the courts try to do more than that, then they're really exceeding not just their constitutional authority, but their expertise. So it's a serious crisis, a recurring crisis, but it's not one I think that one can resolve very simply, unless one simply wants to, as many people do, and as many of your listeners may simply eliminate large portions of federal policy, and that's simply not going to happen. And in many cases, it shouldn't happen. These policies should be improved, but not eliminated. In some cases, they should absolutely be eliminated.
Now,
but one has to look at a case-by-case, policy-by-policy basis, so that generalizations, I think, are all well and good, because we all have to traffic in generalizations in order to make sense of a complex world. But when it gets down to specific cases, we really need to look at what the evidence in a particular case suggests.
When I was talking about Congress earlier, I mean, it's not that I'm saying delegation simply is unconstitutional. I suppose what I'm thinking is when I read that 14 statutes have been passed, but 1,000 rules come out of those 14 statutes, it seems to me the onus of lawmaking has clearly shifted away from Congress to federal bureaucrats. And I think working in a law firm out of law school, primarily in healthcare policy, who shapes healthcare regs? Lawyers representing hospitals, providers, insurance companies, chiming in during the comment period and trying to shape the regulation for their clients' interest. I mean, that's what I observed. It seems to me that is inherently problematic if that's a large part of how policy is being made. And one way to get at this, Christopher DeMuth has written about this, is actually having a cost-benefit test or analysis for regs at a certain level. And there are problems with that, but it would actually require Congress to think deeply about what it's doing when it does delegate and assign over this authority.
Well, I completely agree with that, and as I do with almost everything Chris writes. And that's a major theme in my book, which is first to point out that, as has been testified to by Peter Orszag, who is the top Democratic budget official, and John Bridgeland, who is a top Republican budget official, they say that less than 1% of federal spending is devoted to analyzing how the other 99+% is implemented and how effective it is. And that's appalling. It's totally totally irresponsible, and I think explains a lot of the persistence of government failure. So a major theme of my book is to argue that this kind of analysis, cost-effectiveness analysis, is essential not only before policies are adopted, but also after they're adopted and they're in place, and we can generate evidence of high quality as to how they work. Now, cost-effectiveness analysis is very controversial, and so I devote an entire chapter both to explaining it and to defending it, as well as acknowledging some of its problems, and there are problems. And I don't offer it as a panacea, but I do, as Chris does, urge that it be a fundamental element in policy prediction and analysis, and then review after the policy's in place.
I want to try and think about this 1% figure that you just listed. I remember reading that in the book, and I underlined it. I thought that's such a stunning statement, and thinking about this idea that the federal bureaucracy is stumbling, lacks motivation, lacks spirit. You say that big government isn't going anywhere, all these big bureaucracies aren't going anywhere, so what we have to do is make them work better. Yet, as I read your book, huge signature pieces of legislation you criticize and thoroughly criticize and convincingly, in my judgment. And yet, I guess my question is, why is the federal bureaucracy here to stay? Could we not be in a moment of transition where the spirit, the belief, the ideology of the New Deal, the Great Society, all of that, the new frontier, actually what we're in is we're transitioning away from that through technological improvements, through a society that really seems to be pushing in a more decentralized direction, a more libertarian direction. We obviously don't have the birth rate. It seems to me right now we don't have the economic growth to support a large government. Isn't there a lot of things going on right now we just don't know about? And this may not be locked into place, as you suggest.
Well, I agree that those things are occurring, and most of them imply that decentralized modes of decision-making are more likely to serve the public interest. So that's a very hopeful sign, and you're right, I think, to point to technological change as increasingly empowering individuals to know more about what's happening to them and how best to pursue their interest. However, whenever you have a government structure that is in a position to tax and to spend and to redistribute and to regulate, you're going to invite interests that can use that government to seek to advance their own interests, and that's simply that's the lesson of all government at all times, all democratic government at all times. And so we constantly have to be on guard against abuses of that instrument, even in the new environment. And I have no doubt. Well, we see it now. We see it, for example, in the debate at the FCC, and now the decision at the FCC over net neutrality. You have extremely powerful interests battling to expand their power and their market share, and they're going to be heard, and they have been heard. And so the potential for innovation, the extraordinarily creative powers of innovation that we observe in the internet world, to which you just referred, can still be perverted into regulatory restrictions that harm the public interest, and so it's a never-ending challenge.
Yeah, no,
I don't think technology and innovation, welcome as they are, is going to eliminate the need to try to analyze the problem in the way that I hope my book does, and come up with the better solutions.
It's interesting when we were talking about Hayek earlier, and you mentioned your students hadn't encountered Hayek. And, as I'm thinking that, I'm thinking of, Michael Barone has said on a number of occasions with regard to millennials, their lives are really unthinkable without this sort of on-the-spot, knowledge-based communicative devices they live with. They're used to an array of options and menus, and yet here they are, confronted with government, and how exactly do they interact with it, and think about something like Obamacare, which may present them with a few options, none of which probably that appealing, and yet they've got this other consumer part of their life, which is an array of options, and I just as I start to think about that, it's like how does this really play out versus say my grandparents or my grandfather, who you talk about the GI Bill, and I want to get into your analysis of what has worked. The GI Bill, enormously beneficial. He's liberated by that. He's liberated by, in many ways, I think, the National Highway Act, et cetera, growing up on a small farm, and yet makes his way into a different part of America and a different life, I think, because of these policies. So that's interesting to me, but yet that isn't exactly what we confront right now.
Well, let me just say a word about the young people who are so digitized. They're also continue to be, because they're Americans growing up in this society, highly idealistic, and when they perceive things that are not the way they wish that they were, they want to change them, and their first instinct, I think, today is to think of government as a solution to the problem, and they're not well educated enough, because they haven't read my book, to know that this usually doesn't work. It sometimes works, but it depends on the nature of the problem, and many of these problems are not susceptible to the kind of command and control, top-down problem solving that they think it is. So a lot of it has to do with idealism and seeing things that are wrong and thinking, well, the market isn't solving this problem, therefore government's got to solve it. And that reflects both ignorance about the nature of the problem, oversimplification of the nature of the problem, and also just not understanding enough about how government works and why market imperfections need to be compared to government failures in figuring out how to proceed.
It's interesting. I mean, I think what Obama encountered very early in his presidency, and maybe it's some sort of postmodern attitude of Americans now, is when it came time for him to propose his transformative policies, no one actually believed that they could be executed well, or no one actually believed that they could actually benefit them, or they wanted to be a part of them, it seemed. I mean, to me, that was the big intangible, or the big divide he could never really cross, was that sort of belief. And of course, as I remember, when Obamacare was rolled out early in 2009, immediately that's when the opposition in earnest started, particularly with the Tea Party rallies. So I just want to, and I don't think that's bridgeable for a lot of reasons you outline in the book. But on the policies that have succeeded that you list, what traits do they share, do they have in common that made them a success?
One is that these policy successes, and I identify a dozen of them. I think people could quarrel about one or another of them, but I think on the whole they've been very successful, and maybe I should just mention some of them real quickly. The Homestead Act and the Morrill Act, which set up the land-grant college system. This is in the Lincoln administration, and then the GI Bill and I would say the Federal Reserve Act, though I don't mention it, and the libertarians don't like the Federal Reserve, but I think on the whole it's been useful. Made many mistakes, but I can't imagine a world without a central bank. But I don't discuss that in any detail. But some of the others are the Voting Rights Act of 1965 and the Earned Income Tax Credit and the airline deregulation legislation and the welfare reform of 1996. Now, you asked what they have in common. I would say, in the case of deregulation and the welfare reform, they were eliminating some very bad programs. So you might say, well, that's not really a policy. It's not a new policy. It's eliminating a bad policy, and that's extremely important because in a world in which so much is regulated, we have to dismantle the bad ones, and that should be an important policy priority. But some of the other ones, I would say that they took human nature for granted and tried to figure out how to create the right incentives for people to pursue their own interests and and then have the government get out of the way. The GI Bill is a very good example of that. That is, the government created opportunity by putting resources in the hands of people who were to whom the country owed a great debt, and then basically getting out of the way and counting on individuals to know how best to pursue their own futures through education. So that's an important thing. The same with the Voting Rights Act. The government eliminated barriers, legal barriers, and political barriers to minority groups voting, minority citizens voting, and then the citizens then took that opportunity and pursued it, and we have a very different kind of politics today, much better, I think, politics in terms of representation of minority interests. So I'd say that's the major theme. But when the government tries to alter the way human beings are and improve human nature, I think it's very, very likely to fail.
So, thinking about this idea of something people want, there's pent-up energy, and the federal government actually thinks it could step in and open a door and give people that access. We could apply that easily to healthcare. But we might ask a different question than maybe Obamacare architects asked. Why are people deprived of access? Is it because a market failure problem, or is it actually a market failure problem because of a government failure problem, and also a third-party insurance problem, and we actually don't have prices that consumers are adequately taking into account consumer expectations, or they do take into account consumer expectations, but they're not actually accurate. And in that regard, that's why people are denied access. So it's not a question of an elaborate federal architecture. It's actually making prices more adequate, more accurate in a way, and that would actually lower them, and we could actually see people getting access.
Well, I agree with you, and let me give you perhaps the most important example of that in the healthcare market, which is the deduction for employer-provided health insurance, which is a subsidy of enormous proportions. I think it's hundreds of billions of dollars. I'm not sure what the current number is, but it's very, very large, and it completely distorts the insurance purchasing decisions of individuals. It's a tax expenditure, so it isn't even on the federal budget, so it doesn't get reviewed by the Appropriations Committee. And it's once it's entrenched, as it is now, it's almost impossible to get rid of. Although any sensible tax reform would target that, and also the mortgage interest tax deduction, which is very regressive. And it benefits primarily as the healthcare deduction health insurance deduction that I just described, mainly benefits union members who are among the better paid people in the working population, and so-called Cadillac health plans creates an incentive to purchase a lot more insurance than is cost effective. Well, in the same way, the deduction for mortgage interest is vastly distorted in terms of its impact to assist people who are already far better off than the average American.
What other another corrective that you introduce is just the idea of a more rigorous testing and reflecting on policy results. and creating institutions that create better, I guess, feedback loops for the federal bureaucracy. But I am wondering why you think this would work. I mean, what do the CBO and OMB not already provide in this regard? I mean, CBO is a pretty validly trusted organization.
Yeah, well, I would expand their resources. I agree that CBO and the GAO, these are extraordinarily valuable institutions. They are generally nonpartisan. They're highly respected, and they provide the kind of information that citizens and politicians need to do the kinds of assessments that I call for. I don't mean to suggest that they're not doing a great job. I think they are, but I think we need to expand their ability to do that.
And just in reflecting on the incentives of federal bureaucracy, you think it would just bring more light, more attention to the data that somehow that would break through these problems, maybe.
Yeah, I mean,
Okay.
I don't. It seems to me, CBO and GAO, the staff that conducts these analyses are generally high quality analysts. They don't have any particular fish to fry, and I wouldn't worry too much about their incentives distorting their analyses. They're very concerned about their reputations as objective analysts, and I think I've never known their work to be attacked as biased. It may be attacked as incomplete or incompetent, or all the other reasons why a particular study may be criticized, but not because it's not a plausible, objective marshaling of the evidence.
Peter, I wanted to thank you for your time this afternoon and for this interview and for the opportunity to read your book. It's been a great learning experience for me. We've been talking with Peter Schuck, the author of Why Government Fails So Often and How It Can Do Better, Princeton University Press. Thank you so much, Peter.
Thank you, Richard.
This is your host, Richard Greinch, and you have been listening to a podcast that can be found at libertylawsite.org, where you can subscribe, comment, and find other episodes and links related to today's conversation. Our email address is lal@libertyfund.org.